Thank you.
Okay, viewers, then shifting focus, we have Gaura Sengupta, the Chief Economist of IDFC First Bank, who's joining us on the show to make better sense of all the WPI numbers that we're seeing. More flashes on the bottom of your screen, viewers, in terms of what the breakup is of this WPI number. But Gaura, afternoon, and thanks for your time today. Good to be chatting with you. First up, give us your sense right off the bat. What are you making of this 3.88 number? It's a significant uptick on a month-on-month basis. How much of this has to do with our internal macros at play? How much of this is because of the war situation in the Middle East?
I think this is maximum to do with the war situation. It was slightly above expectation. We were expecting a 3.6. It's come out at 3.9. And the rise is primarily led by fuel. If you see consolidated fuel, which includes not just crude, but petroleum products, etc., that has turned positive. It's gone to 6.2% in March versus a negative reading of 3.6 that we had in Feb. So the month-on-month jump that you would have seen in the petroleum products, crude oil category would have been substantial. If you look at the core WPI, which is known as non-food WPI, there it's very stable. It's just marginally inched up to 3.7% year on year versus a 3.3% for in the month of February, and that is also very stable month on month. Non-food manufacturing inflation, we are not seeing that much of a pickup. So it's primarily the first round impact, which is surge in global fuel prices, which is getting reflected in WPI. And WPI will fully express it because this is producer price index. So it reflects external, the West Asia crisis, rather than any change in the domestic fundamentals.
Understood. So, Gaura, on that note, I'm just taking a look at the food inflation number. That's also come in absolutely flat on a month-on-month basis at 1.85%. You have other indicators also that are not looking very high. Manufactured products looks absolutely flat. Nothing much to worry about over there too. On the other side, like you said, it's largely to do with the West Asia conflict. So I'm seeing fuel and power group index. We've seen a very big surge coming in over there. So would it be okay to conclude, Gaura, that at least domestically, if you strip off the food and fuel component, just looking at the core, we're comfortable right now on the WPI level?
Yes, definitely we are comfortable in the month of March. You saw that in CPI also. CPI headline was in line with the expectation at 3.4. Core CPI, which you strip out food, fuel, gold, that was still very low at 1.9% for the month of March. So that whole fear that right now, because March was when you just had the start of the West Asia crisis, so producers usually take time to pass on the higher input cost prices to consumers. That secondary pass through, which will happen over the next couple of months, like April onwards, where they will gradually producers will pass on their input cost pressures that they are seeing to consumers, and then you will start seeing a sort of it getting reflected in other items apart from fuel and power, etc. So, but that takes time. So, right now, the month of March, you've seen the first round impact, which is primarily related by fuel. But the longer the prices stay elevated globally of crude, gas, even other items are impacted. For example, chemicals, metals, etc. Freight costs have picked up because of the insurance premium of the West Asia crisis. So you will start seeing the second round of impact of those items in non-fuel items, but it'll take some time. So we still maintain that at least for CPI, the headline should be around 4.9 for the year, reflecting both the first round and the second round impact. WPI will see a much stronger pickup because it will show the full impact of the pickup of not just fuel, but metals, minerals, etc., all of which have got impacted by the West Asia crisis.
Understood.
But it'll
So,
take some
yes.
time for the inflation pressures to broaden out.
So exactly, Gaura, my next question was just on that. Just today, in the last couple of days, we've seen crude prices come down dramatically. There's been a drastic fall over there.
Yes.
We also understand that there is another a round of talks that the US and Iran are going to have, let's say, this week or sometime when we have more clarity on that. But assuming all goes well and crude stays at the level it is right now between $90 and $95, In that light, where do you see the WPI heading from here? Will the pressure then start to reduce nominally, or will the relief be faster?
So the prices have definitely reacted to hope that there will be another round of negotiation. I think President Trump has also indicated that the the West Asia, the war basically is closer towards its end. But I think the market reaction is, I would say, a knee jerk reaction to positive sentiment. The issue is that even, let's say, if you have a complete resolution of both all parties involved, they reach an agreement that there is lasting peace, it takes some time for supplies to pick up, especially because we don't know the extent of the damage of production facilities in GCC, in Gulf Cooperation countries. It'll take at least a couple of months, maybe three months for production to come close to normal. Over and above that, the freight movement globally will remain more expensive than pre-West Asia crisis period, because you will have that war premium which will be now baked in. So we do expect crude to come off. For us, we see it averaging at around 85 to $90 per barrel for FY27, which does, and this is in the Indian crude basket, which is slightly
Sure.
higher than Brent. So this does build in some decline, but it'll take some time. It's not going to be very fast.
Okay, so we'll be watching out for as and when that plays out. But Gaura, thank you so much for putting this so well for our viewers and breaking down this WPI reading for us. Thanks so much for your time today.
Thank you.
Okay, viewers, on that note, time to slip into a very short break. Be right back with more news and updates on the other side. So stay tuned.
In association with